Hi, this is Konhow again. Today's topic, US CPI could be just the beginning of a rally. Why is it so? And there are three parts of today's discussion. Number one, why CPI could be at the beginning of a rally. Number two, on 14 December last year, Fed made this statement. Inflation, it is not transitory. It kind of changes everything. Why is it so? And number three, that we all knew that the inflation may be here to stay and what will be one of the strategy to counter this inflation. Now, before we get into this topic, please take some time to read through the disclaimer here below. Now, let's get on to the first part, why the CPI could be at the beginning of this rally. We're going to focus on the blue line, and the blue line include the inflation numbers of food and oil, which is one of the most essential to many of us. And also take this opportunity to go through the last 40 years of development in CPI, the inflation numbers, that we could see that in the 1980, that the CPI went up to a high of close to about 15%. And then the central banker, Paul Volcker, he's trying something that no one did before, that let the interest rate move up way higher than the CPI. It works. The CPI literally came off to this low that we could see here, nearing about 0%. And I would say that over the last 40 years, the inflation has been under great control over the last 40 years. Now, let me just remove this. Yeah, so we just focus on the last 40 years, what happened to the inflation. We could see that over the last 40 years, whether you call there's an increase of money supply or QE, but in short, we all knew that it's printing of money. And we also know that when there's a printing of money, it dilutes the currency. When a currency is being diluted, inflation will come. It's not just in the United States, but all over the world. And Bao would say that the Central Bank of the United States have did an amazing job over the last 40 years. They have maintained the CPI or inflation number at about average about 3%. But I want you to bring the attention here is that for the last 40 years that it was a range-bound market for inflation. But suddenly something happened in 2021 and 22. This range have been broken above and stay above. Now let's look at this number here. That we could see that April 2021, it broke above 3%. It's not just that. It broke above and stay above 3%. And that's where I think the Fed came in to make a statement. You still remember before 14 December 2021, there was post-COVID where people go back to work, get on the street and purchase, do their shopping, and there's inflation. So the Fed and even myself hope that this inflation is just transitory, meaning that it's just for short term. But looking at this number, it don't seem like that. And on the November 2021, it broke the 30 years high and stayed on top of 30 years high. And this is 30 years high. It broke above that and stay on top of it. And that's where the Fed came in to make a statement. Before that, they say that inflation is transitory. Then on 14 December, they say that inflation is not transitory. It means that inflation is here to stay, which I think is a very responsible statement to make. Basically, they are preparing the environment that in 2022 and maybe beyond, there will be more interest rate hike that will be coming out. But I think the whole thing about the discussion topic here today is that yes, inflation is there and it's definitely not a good news for the stock market, but there will be some opportunity somewhere else that we're going to discover that together very, very shortly. And we could see that the inflation February 2022 onwards, it broke above the 40 years high, and this was a 40 years high, and it stayed on top of it. And I do not think that inflation is going to come down anytime soon. Seems like it's going to continue to move up. So in last week tutorial, we discover about what is a good inflation hedge assets. We discover about that. So we discover that it is gold, and gold is also a currency pair against the US dollars. It means that when US dollars ease off, gold should pick up. 2 points here. Number one, gold is an inflationary hedge. And since that we believe that CPI is going to continue to move up, the uptrend may be just at the beginning. And that's what we could see here. It may be at just beginning. So this will be a point of reference. And I do hope that it will not come to that. But just in case that it go to that, what are your measures? Are you prepared that it will come? So gold is one of it. And how we're going to do that is that we study the dollar index. And dollar index last week was a very interesting move here that we could see that there was an inverted hammer, meaning that if I'm seeing that the US dollars index is going to move down for the next few weeks, and that's my view, and this way it's been moving down, and naturally what I do is that I will buy into gold. So gold is also an inflation hedge instrument. It can be for long term and it can be for short term. Of course, long term you can buy into gold fund, gold ETF, but for short term, I will trade into the COMEX gold like this. So I use the dollar index to time my goal as well. Just one of the techniques that I'm going to share with you. Now, so that's what I do. And let me just go to the monthly chart here. And over the last few tutorials that we have, so I have this technique called how to draw a trend line. So basically, that's what I did last week for gold. In drawing trend line, I advocate that we try to connect at least 3 significant trough, 1, 2, 3, and we try to find the best fit. So we have 1, 2, 3, 4. So this was a good support. And let's look at the weekly chart. Yeah. And that was what happened last week, that I saw that there was a little hammer here and it's supported by this uptrend. Now, for those who are interested in getting into the COMEX micro gold, this is how it works. The contract spec states that every minimum movement is 0.1 point. It is worth $1. So if I'm going to convert to 1 full point, I took the liberty to convert into that for easier reference, is $10. So on the context, about 1,700 points if I make a purchase into this micro gold. So what's the total worth? It's worth $17,000. So in the context of 100 point profit, that will be $1,000. So of course, if you make a wrong decision, then that will be a $1,000 losses as well. So if you're into shorter term trading, the data feed is definitely a must for traders. I'm referring to the live data feed. Now, let me just go back to the first slide here. I think this would be a good point of reference that, just to recap, you've been range bound for the last 40 years and it just broke above, and it could be just the beginning. But do not be too gloom and doom. Yes, it's no good news for the stock market, but there will be opportunity definitely somewhere else in the yield market, especially in the commodity market. And I like the gold market as well. In part 2 in this series, we will do a deep dive on if CPI were to decline, to at what specific level before we can consider inflation is under control. Stay tuned for our next episode in this series. We will discuss more on the inside of inflation and rising interest rate. More importantly, how to use this knowledge, turning it to our advantage in these challenging times for all of us. Continue to explore this topic with these related videos and register for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.